Hey everybody, it's Bob Anderson, and it is February 1st, 2023. Tomorrow is Groundhog Day. So let's hope somebody doesn't see their shadow tomorrow, because it's been a miserable winter. Anyways, trade I want to go over today in my series of trades. I did the 5-minute gold line trade yesterday. I'm going to do the overnight open trade. It showed such huge promise today, so I figured, well, I better take today as the opportunity to put this video together and show it to you. And then and then down below in the description, I'm going to actually outline this stuff a little more detailed about the rules, just like I did on the 5-minute gold line trade yesterday. If you actually went into the description at the bottom, you will see that I detailed out the rules a little better. Anyways, today was FOMC day, just to kind of give you an update, and it was oil inventory day, and yeah. So I decided to just play it cool. And I took a 5-minute gold line trade in the ES, I think about 9:47 or so, back to the overnight open for 5 points, and that was it. One trade, I was done. Looking back on the charts now, wow! I sure could have made some money in oil today. I sure could have made some money in oil today. I always find it funny whenever I just kind of downplay that I'm even going to pay attention to the market. That always seems to be the day that, holy shit. But if I had sat here and stared at the charts, consolidation would have been like this all day, Anyways, overnight open, it's the least discussed trade that I do because it doesn't even happen every day. But basically, the premise of it is it's a line. Once again, it's gold. If you guys get a hint on something, all my trades start with something gold. Anyways, that's on purpose, by the way. The overnight open price is the opening price of the instrument, either the ES or oil or gold or actual gold or the YM or RTY, whatever. It's the opening price of that instrument at 6 p.m. Eastern Standard Time the night before. Let me pull up because I did not write this down. On Ninja, it is called Current Day OHL, which stands for Open, High, Low, which that creates your high that changes throughout the day if price is going up, your low, which changes throughout the day if price is going down. But the one thing that never changes is your overnight open, okay? Because that is the price that it opened at 6 p.m. Eastern Standard Time the night before. And Ninja's indicator, when you put that on your chart, it just does it for you. Now, let's talk about the trade. The trade has two entry strategies. Mostly I use either depending on the instrument, and I'm going to show you what I mean. But ES has a tendency to move a little slower than oil around the overnight open. So I look most of the time for a break of a 1-minute candle back in the direction, the rejection of the overnight open. I'll show you what that means in a minute. CL, I usually look for just the rejection of price. So what I'm going to do is I'm going to wipe this board clean here in a minute, and I'm going to show you exactly what I mean. And then a trigger is multiple. I always talk about reach. So let's just say we're underneath the overnight open. Let's say it's way up here. What you're going to want to see is candles, green candles from below reaching. And you can see that they're reaching for the overnight open. And that's where they catch the amateur traders in FOMA because they're seeing it run. And so they're jumping in and jumping in and jumping in the whole time. And I'm going to show you examples of it today. The whole time the big traders are going, yeah, sure, jump in, little clowns. Because as soon as they get it to that overnight open, they're going to reverse it and then just clean them right out. And if you know anything about reversals, if you got the FOMA people chasing it up, when the big money starts reversing it, they're selling, okay? And they're buying sells and they're selling. Well, the people that ran it up at the end, meaning the FOMA people, they're getting nervous, so they're selling out too. So selling accelerates back down. Whoa, it can get fast and ugly. So anyways, 2 entry types depending on the instrument. And then the trigger first is multiple candles that reach for the open with price penetrating the overnight open and then a rejection from that penetration. Okay? You go with the same philosophy of 1, 2, 3. As I talk about many, many times, if you remember the first trade I showed you I took yesterday, 1 was 8:30 news, ran right up to the open, wham, rejected for 9 points. Ran it right back up and then wham, rejected again for another 4 points. And then it was the third time they came up and whoop, right through the open. Again, that's the same philosophy on the overnight open. You can take the first attempt, you can take the second attempt, but the third attempt, you might want to be on the other side of the trade. So anyways, these are the rules. Well, this is how it happens. And these are the rules. And I'm going to show you what I mean by the entries. Okay, so let me clear this off. Let me clear this off for us right here. All right, so just like yesterday. So let's say this is the overnight open. Right here. Let's go from the bottom. Now let's just say this is oil. So oil. Let's just say the overnight open, just for conversational purposes, is 78.50. Okay. Well, what you're gonna want optimal. Let's talk optimal. Optimal, you're gonna want price kind of hanging around down here. Let's say at like 78. 10. Okay? And then what you're going to want is all of a sudden, like the moving averages that were pushing price down are giving up the ghost, and then you've got this big candle right here. That's like about 15 ticks. And then you got another big candle. It's like at least 15 ticks. And then another big candle. That is what you want to see into your overnight open. You want to see that reach, that acceleration towards that overnight open. Because that's where the big money is going to be running it up, and then the amateurs, you know, us, who aren't riding on the back of the sharks. We're buying in. Oh my God, it's running away. We're buying in. And they all know that at the point that they get it to pierce through here, maybe to, I mean, the piercing can be anything like, the piercing can be anything like 78, 52, 78, 55, you know, something like that. So like 2 to 5 ticks through, something along those lines is normally about what they're looking for. 1 to 5 ticks, okay? And as soon as they get that, the big money, they're gonna slam it back down. So what do? I'll tell you what I do, all right? Man, I got too many candles going. I got too many things. Here we go. I create a sell stop down here, okay? And as soon as they pierce that through, this is with oil, so this is your entry. As soon as they pierce that thing through, I've got it sitting up here, but I don't have it clicked. It's actually sitting down here, okay? Once they pierce it through and it comes up to here, I click my cell stop right there so that I can jump on the back of that shark that is now going to reject that thing down. And let me tell you something. I'm going to show you some examples of that today that are absolutely brutal. Okay? But it's not brutal if you're the one sitting here. It is brutal if you are the one chasing it up. Okay? So that is my entry approach. Very important. That is my entry approach with oil. Okay? So this is all one candle right here. So I'm not looking for a candle close and then a break of the other candle. A more conservative approach would be that. A more conservative approach would be to bring your cell stop right here, which is the bottom of the candle, and try to hit that. The problem is with oil is that rejection, which I'll show you today, that rejection can be so fierce and so forceful that this candle right here, this 1 minute candle, can be literally all the way down here by the time it closes. Now all of a sudden your distance from here to here, which is 78.25, is 25 ticks. Holy shit, what kind of stop you put in? What are you counting on? You see what I'm saying? So let's say you hit this trigger here, okay? Let's say you hit this trigger here. And so I do this out of the gate with 20 tick target, 10 tick stop. Talking about oil. So you got your 20-10 that we talk about. The first thing I do, and I mean the first thing I do, when I get brought into this trade is I grab that 10 tick stop. This is a violent trade. I grab that 10 tick stop and I drop it right above that pivot, which if I'm fortunate is like 78.53. Okay? And I'm in at probably 78.49. So what am I risking? $40. So once that trade triggers, I immediately grab that stop, drop it right in there. I mean, I'm telling you exactly how I trade this trade. Okay? And then based on how fierce that thing goes down, I can grab my targets and move it down or whatnot. Okay? But the key is to grab the stop and manage the stop first. All right? So that's how this works on CL. Okay? Now let's talk about the ES. The ES has a tendency, not in all cases, but it has a tendency to be a little bit more slower, a little bit more rhythmic. So what you can do with the ES, and this is the conservative way to trade this, okay? I'm going to teach you the conservative way. Again, same concept. You're going to have these big green candles that come up to here. Okay? Now, as soon as that candle closes and you're up here, you're going to have the same concept. You're going to have your sell stop down here, and you're going to drag it and you're going to put it there. Then what has a tendency to happen is the ES will reverse itself from here. It never closes. You got to, again, this is just like the continuation trade. You don't want a candle, a whole body. What eliminates a trade in the overnight open is if this kept going up and a whole body opened and closed north of that open. No trade. Okay? When a whole body, wick and all, opens and closes North of that overnight open, no trade. Now, let's just assume that didn't happen, okay? Now all of a sudden you got, a red one like this, and it's here. That's when you take that sell stop and you move it to here, okay? It's the continuation trade, but on a flat line. Is this making sense? Okay? And the same thing we talked about. I do a 20-10, and as soon as this thing enters and goes down, I'm dropping that sell, that stop, that 10 tick stop right there. And then I'm managing the trade down. So with the slower moving instrument, like the ES, this is the preferred trading strategy as long as this doesn't get too far from your overnight open. Okay? So let's talk about some examples. I probably have already run my mouth too damn long, but anyways, we'll see. I have to look. Sorry. Oh gosh, yes. Sorry, folks. Jesus. These are important. These are actual trade videos. By the way, for those of you that are in overseas, Europe, all that kind of stuff, this trade works like a beast in the overnight. So, for example, here is 9:04 Eastern Standard Time in the U.S. 1904 Eastern Standard Time of the ES. Here's the overnight open. Look at that green candle reach up. I'm gonna give you an idea. This is 40.8150. This is 45.75. Okay, it's like 6 points. And I mean, it touched and rejected. And look at that. Hell, even if you played the break of the candle, look at that. That's tremendous. That's even at whatever that is, 9 o'clock in the evening, Eastern Standard Time. So let's talk about the rest of the day. I don't remember, so I actually don't remember. So let me keep moving this along. So overnight open, you're down here at new lows, yada yada yada. Let's see. I can't remember if this thing came back to the open. I don't actually remember. I do know oil did. Okay, so here you go. Here it is. This is 9 o'clock in the morning. Okay, 9:50. So this ran up. See these big green candles? And guess what? You never got a continuation breakdown. Here's where your entry would have been, sell stop. Here's where your entry would have been, sell stop. And these candles just kept going up. So that kept you out of a failed trade. Pretty cool, huh? Then it came down, touched the top of it, ran up, then it came down and rolled over. So right now, you're not seeing anything to worry about. And by the way, nothing dragged you into a fake trade. So let's keep going. I don't remember if this came back again. Let me look. I really wanted to get to oil. Oh, okay. Yeah. Just to show validity of what it is I'm talking about. This is the Fed, FOMC. This is the Fed releasing their report. Bam, bam. Look at the rejection. Okay? So the entry candle right here is 80.75. It ran to just to give you an idea, it ran to 50, which is 30 points. 30 points. Just to give you an idea. I'm not saying you're going to take that trade for 30 points, but look where it reversed. That's not magic. Okay? Run all the way through. Now we're over the top, and this is where it is right now, which is 3:10 in the afternoon. All right? So let's talk about oil. Now, it was oil inventory report day, okay, today. But I think it's important that you see this trade more than once. So let's get past oil inventory. Oil inventory is at 1030. Okay, so let me blow this up. Let me blow this up because I want you to see this. I want you to see what I'm talking about. All right, so here's oil inventory, 1030. Okay, ding, ding, ding. And then so here's your reach. So this came from, this bottom is 78.45. This overnight open is 79.06. This is over 50 cents. Green, wham. What did it reach through? It reached through to 79.08. Huh, what did I write on that board? Did I write 2 ticks? Did I write 2 ticks? Get the hell out of here. So your sell, if you dragged your sell stop up to this, when that thing broke through, your sell is right here at 79.05. Okay? So remember that number, 79.05. Remember that number. Let's just see what happened after they tested that price. Which, by the way, that's just like magic. That's sitting up there. That's like magic. How did that happen? How did that go through by 2 ticks and then come back down? How did it do that? I don't know. Maybe some sharks? I don't know. Let's see where it went. Rolls through here, gets underneath your 5-minute gold line, gets underneath your red line, keeps on trucking. And then here it hits your red line, keeps on trucking. It's still on the south side, which means it's on the sell side. And it goes all the way down here to 76.25. I'm not telling you 76.25 is where you would have ended up. But here's the funny part about that. Okay? What I can tell you is it reversed at exactly 79.06. That I can tell you. And 76.25 is a $2.81 reversal from a point where it reversed. So the question is it more important to know where it reversed or where it's going to stop reversing? I would rather know where it's going to reverse. And there it is. I mean, this shit's powerful. This shit is very powerful. These are golden nuggets, folks. Literally golden nuggets. Let's talk about the test of the 5-minute gold line. I mean, the 5-minute red line. It tested the gold line a few times. Let's talk about the 5-minute red line. Here's a rejection. Here's your sell right here. The break of this candle right here. That's at 70. Let's just talk about this trade. This is oil again. Again, this is after oil starts calming down. That's when that 5-minute red line starts working. That's when that 5-minute gold line starts working. Market kind of calms down. Now it gets rhythmic. Your sell stop is at 78.39. Who remembers that this thing went down to 76.25 from here? Look at just follow the top of the candles. That went all the way down to 77.70. If you just followed the top of the candles before it ever even broke the top of any candle. And then it just kept on going. All from a rotation off your 5-minute red line. When I say, have you seen this movie before? I'm not making this stuff up. This is every day. You just gotta be on the right side of which one of these things is gonna be the pivot point. You gotta take it. You gotta keep your stop. Like even this, let's just talk about this 5-minute red line trade in oil. You're in at 78. 38.39. Your stop is at 78.50. That's where your stop is. So 11 ticks. And before it ever even broke the candles, for the first time, you would have made over 60 ticks. $600 a contract. Anyways, overnight open, great trade. Doesn't happen every day because price doesn't necessarily go to it. And remember, look to your left. Oh, by the way, there's an overnight open trade right there. Oh, we talked about that one. That happened in the ES. Yeah, there's the overnight open. So the overnight open worked in the ES a couple times today. 9 o'clock last night and 2 o'clock this afternoon. Both of them for 30, 40 points in the ES. Pivot points. Don't you want to know where price is going to pivot? If you know where price is going to pivot, that's what makes you a successful trader. Because you're getting in on an edge. Keeping your stops small, your targets big, making money. Everybody have a good day. I'll talk to you later. Bye.